capital gain tax. And then we have indirect taxes, that is business, what the business collects from our customers and pays to government. And a very practical example is what we'll be discussing today. George, you cannot hear me? Can you hear me now? Please, from the chat box, just confirm if you can hear me. I've seen a complaint from George. Okay, I can proceed. Thank you. So yes, so our major focus for today will be discussing indirect taxes, and just to narrow it down, we'll be discussing VAT as a tax. So when it comes to taxation, we are usually guided, and for VAT in particular, we are guided under the VAT Act of 2013, and this act guides on what needs to be charged, which can be found under Section 5 of the VAT Act, and it's charged on the consumer. So in short, what you're trying to say? Okay, just let me request just to stop sharing 1 second and then I get back. Sorry, my humble apologies for that. So yes, so we are discussing please, if you can confirm if you can see my screen again. Okay, thank you. Please let me just resolve. So Dismas, if you can confirm if I've lost the echo on my side. Am I now clear? Okay, thank you so much. My humble apologies. I had a few echoes from my end. I was trying to resolve the same. So we were discussing the imposition of tax, and I just wanted to specify and just to remind our dear listeners that VAT it's a consumer tax, meaning this tax is paid by the final consumer of a good or a service. And the person who's supposed to pay VAT is the registered VAT taxpayer only. So in short, what you're trying to say is, if I'm a business, for me to be able to qualify as a VAT taxpayer, I need to first be registered for VAT. And second of all, I'll be charging the VAT to my final consumers or to my customers. So what are the VAT principles? So one of the VAT principle is that we look at if you are expecting to supply goods or services whose value will be 5 million and above within the 12 months or a particular year, then we expect you to register for VAT within 30 days when you realize this. And remember, we are looking, the 5 million, we are looking at the full 12 months. The VAT registration threshold is not applicable to non-resident persons who are supplying imported digital service. So we just wanted to stress that. So if you are a person who's supplying digital services, this threshold does not apply to you, meaning at that particular point, you'll be expected to register and pay for VAT. We are happy to say that registration is done online. So all you need to do is just to be registered for VAT. If you go to our website through the iTax portal, you should be able to just key in your PIN number. And if you're eligible for VAT, you'll be able to just select the VAT as an additional obligation and submit. So registration is very easy for you, and you can do it at the comfort of where you are. The other principle around VAT is that you are expected to file your monthly returns. So you're supposed to file monthly returns. And then again, we are happy to say the monthly returns can be filed electronically. So every 20th of every month, we'll expect you to give an account of what you've traded, how you've traded, and if there's any payments to be made, you need to make the same online. So another additional thing that we'll just like to inform you, our dear listeners, is the fact that payments can be done through your preferred bank. So if maybe you're banking with StanChart, you'll be able to just generate a slip and pay it if it's Barclays, if it's NBK. So you have an array of options of where you can actually make your payments. We also have an option for you to make your payments using mobile money. So all you need to do is to be able to, once you get your payment receipt, you can pay using mobile money, and it will be able to reflect. And finally, an additional option that we have put in place for you is also using the online platforms, just so that you'll be able, the RTGS, to be able for you to be able to make payments. So we encourage you, if you're a registered VAT taxpayer, or if you know a registered VAT taxpayer out there, please encourage them and just tell them it is very easy for them to be able to file and comply with the taxes that we have. So what are the legal provisions for us? So we mentioned we have the VAT Act, which usually guides us. So we have legal provisions of Section 43, where you are required to use an electronic tax register. And we also have our Tax Procedure Act, Section 75, where the commissioner may be authorized that the submitting of tax documents, including tax returns and tax invoices, can be done through the use of technology. And then there is the VAT electronic tax invoice regulations of 2020. So these are just a few areas where we get legal provisions on how we are to collect VAT, and which manner you should be used to be able to comply with VAT. So we have, I know everyone has heard about the Teams Compliance ETR. So I'm just going to describe what a Teams Compliant ETR is. So a Teams Compliant ETR is an ETR that is capable of one, validation. And the validation is if you have an Teams Compliant ETR, we should be able to validate that invoice. So validation of the data at the point of issuing that invoice. And how is this done? It's done through the generation of a unique QR code on the invoice. For those of you who have been keen, you've noticed that the current receipts that you receive from the supermarkets have a QR code. Before, they never used to have a QR code, but currently they have a QR code. And this is just a way of as ensuring that you are able to validate that particular receipt that you have. And then another additional feature that a TIMS compliant ETR has is the ability to transmit. So transmission of the validated electronic invoice to KRA on a real-time or near real-time basis. For those of you who VAT is not very new to you, you'll realize you used to, when you file your return, at the point of you filing a return is when you'll now generate your ETR machines attached to your return and then present it to KRA. But you're happy to say that currently the transmission is real time. So immediately when you issue a receipt, you'll be able to get corresponding feedback through your iTax profile, and KRA will be able to capture the same. So all newly registered VAT taxpayers and those who intend to replace their ETR are reminded to adapt ETRs that are TIMS compliant. So please, if you know a friend out there, just tell them that they should make sure that they get a TIMS compliant ETR to be able to enjoy the benefits that the TIMS enabled ETR comes with. So this is just a sample tax invoice. The features are the same as just as been described before. So you will have the buyer's PIN number on the receipt. You'll have a control unit serial number, a control unit invoice number, and the QR code that we've just been talking about. So in a nutshell, this is how TIMS compliant ETR actually looks like. So what are the recent developments? So the recent developments is the 12 months transition period was provided by the VAT regulations that we've just talked about, ended on 31st of July of this year. However, administratively, since taxpayers were having a few issues with the transition, they were allowed more time to acquire and integrate the ETR devices with their invoicing system up to 30th December initially, and now a further extension granted up to 30th of November 2022. So before I proceed, I just kindly remind us the deadline is 30th of November 2022. Please tell your friends out there to make sure that at least they meet this deadline because it has already been extended before. So we appreciate as KRA the VAT registered taxpayers who have already transitioned to TIMS, and we encourage if more will also just get on board and use the ETR, the TIMS enabled ETR machines. So that is the tool that you will require when it comes to filing. So how do you classify these goods and service? So when it comes to VAT, you need to classify your goods so that at least you'll be able to give the right and the correct rate that is supposed to be charged for that particular good. So we usually classify them into two major categories. Category one is exempt. And exempt, these are goods and services that do not attract VAT at all. We say that VAT is charged on the final consumer. So what if the goods I'm selling does not attract any VAT? So for that particular reason, we call that an exempt good or service. So all goods and services that are in this particular schedule, category, are under the first schedule, where part one shows what is exempt, describes what is an exempt good, and part two describes what is an exempt service. Just so that at least we'll be able to understand and appreciate, exempt goods mainly are usually food items. Mainly, you'll find food items and medical and agricultural supplies. And we say it's because these are basics. But just to make an addition, for the food items, it's specifically food items that are in their raw form. I can see there's still a complaint. Are you still hearing a lot of sound on my background? Or you, Dismas? Okay, it's okay. Okay, can proceed. Okay, so and then the other thing is vertible supplies. And the vertible supplies, they are subjected to VAT. So all other goods and services that are not listed in the first schedule are not exempt. So we are going to discuss about rates because we've just discussed about the exempt and we've spoken about taxable rates. So when it comes to VAT, we have three major rates of VAT. And the three major rates of VAT that we have is 1, 0%. Maybe someone could be asking, is there a difference between 0% and exempt? Because they more or less mean the same thing. There's a lot of difference when it comes to taxation. So for zero-rated supply, these goods you'll find them, they're listed. It's a whole list that you can find. When you find time, you can just go through and pick out some of the goods and services that are zero-rated. They are listed on the second schedule of the VAT Act. And again, just so that you'll be able to appreciate, most of the goods that you'll find here are exportation. So goods that are being exported and goods that are supplied to EPZs, to privileged persons and to public bodies. You'll find them listed on this particular category. The main difference between a zero rate and an exempt is 1. Zero rate, you are allowed to claim the input VAT that was charged. I'm going to talk about it later as I continue in the presentation. But when it comes to exempt, you are not allowed to claim the input tax that is charged. Our second rate is 8%, and 8% is mainly for petroleum oils obtained from bituminous and motor spirits. And the most famous one is the LPG gas. So these ones are charged at the rate of 8%. And finally, the common rate that I'm sure all of us are familiar with, it's at 16%, which is a general rate for other goods and services. So it's good for us to appreciate as listeners that in as much I know everyone thinks that the one common thing that we find is that taxes are usually high. So please, it's good for us to appreciate that most of the major products that we use and the basic products, you'll either find them under the exempt rate, or for the LPG that we currently use a lot, you'll find them at the 8% rate, just so that at least we could be cushioned from the current state that we are in. So under classification of goods and services, so just a list to give you a list of some of the zero-rated supplies is exportation of goods, transfer of business as a going concern, supplies to EPZs and SEZs and privileged bodies, horticultural services, and exportation of taxable supplies in respect of business process outsourcing. Some of the few exempt supplies that we have are financial services like insurance services, including insurance brokerage services, educational, medical, burial, and social welfare by government, transportation of passengers, except where the means is hired, chartered, and an international airport transport. So for transportation, just so that maybe I can clarify on it, you see when you take a matatu to come to work, those public means, they are exempt from VAT. So the sale, lease of land and residential premise also is exempt from VAT. So this is just a few highlights of what is exempt, what is zero rate, so that at least we'll be able to find a clear picture and be able to appreciate the two different classifications that we have under VAT. So there's something called a tax point, and a tax point, just to simplify it, is at what point are you expected to account for that VAT? Remember, we are guided by principles, we are guided by law. So, and tax point usually is a very huge headache for most of us because people do not understand exactly at what point they expected to pay the VAT. Remember, we've all agreed up to now, for you to pay VAT, you need to be a registered VAT. You need to be a registered business for VAT. Two, we've agreed that the person paying the VAT is not you, rather it's your final consumer. So if that is very clear to us, then what now becomes the tax point? So a tax point or a time of supply for a transaction is the date the transaction takes place for VAT purposes. And this is very important because it will tell us which period a transaction belongs to and to which VAT return to include the transaction. So usually the parameters that we use to determine the tax point is one, when did you issue that particular invoice? Two, when was the date of delivery of the goods or performance of the service? Three, when did you receive part or full payment on account of the supply that you're supplying? And the date a certificate is issued by an architect. Well, let me just explain a scenario. So I have a customer. So this customer requested for goods on 28th of maybe September. So on 28th of September, I received the invoice. I issued the invoice on 29th of November, and then probably supplied the goods on 1st of October. That could be the scenario that you're looking at. So the question that you should be ask yourself, when is your tax point? At what point are you expected to account for this? Do you account for it in October when you delivered the actual goods or offered the actual service? So that when you'll be filing your return, you will include that particular cell on your October return? Or do you include it in your September return, given that the actual conversation and the agreement started in September? So for you to know at what point you're supposed to make this payment and account for VAT, the earliest of any of this scenario is what should determine at what point you will account for VAT. For example, if I know there are some people who deliver the goods, like for hire purchase, for example, I will deliver the goods and then you will pay part of the amount. If it's hire purchase, you should account for that amount when you receive part of that payment. So you need to be able to account for the full amount. If someone delivers goods and then pays later, the date when the goods are delivered now becomes your guiding point to know at what point you're going to account for VAT. Please, our dear listeners, please just take note and let this be a reminder, because this is one of the areas that we feel most of our customers do not understand where the interpretation comes from. But just to stress it again and again, for the purposes of VAT, we'll take the earliest of the four scenarios that we've just mentioned today. So how does VAT operate then? We've spoken about a Teams enabled ETR. We've spoken about the classification. We've also spoken about the tax point. So the next question will be then, how does this all tie in and how does this operate? So VAT operations is, we call it input output principle, meaning if I'm a registered person, I'm expected to maintain a record of my sales and my purchases for a tax period. Example, I'm in the business of selling water, maybe bottled water. So I buy the water and then I sell it at maybe my shop is based somewhere in a mall. So what happens in this particular scenario? I will keep in the VAT that I'm charged for that water. And then any VAT that I'm charged maybe for, so that I may be able to sell this water. Maybe there's rent for the mall and they've charged me VAT. All this now become my purchases towards me selling that particular good or commodity at the end of the day. So I need to put in all my records of any purchases that I've made and then put in my records of any sales that I've made. So in short, what are we saying? For you to determine how much VAT you're supposed to pay, we say VAT payable is equals to the output VAT, the VAT that you've charged your final consumer, minus the input VAT, the VAT that you are charged. And please remember, if this calculation becomes a positive, then it means tax is due and is payable on or before 20th of the next month. So in our scenario for the September and October, so I need to do my calculations and make sure that I make my payments before 20th of the October. This, in an event that maybe it's a negative, it means that you're on credit, you've paid tax in advance. So for this particular case, you can carry forward that credit to the next month. So we're going to showcase VAT operations chains of supply. And the reason why I'm showcasing this is because one of the most common sentiments that we receive from our dear taxpayers is that we usually have double taxation. That is a very common sentiment. And people will insist and say, why are you taxing me double? So I'm just going to showcase an example of how the input-output system works. So our water that we've just given as a description was manufactured somewhere. So because the manufacturer is making and selling more than 5 million in a year. Sorry. Because my supply, because I'm a registered VAT person and I'm supposed to account for VAT, I charged VAT as an output. So the VAT that I'm supposed to pay is what is the output VAT that I'm pushing to the wholesaler minus the input VAT. So if I had to buy anything that was charged VAT in producing this water, I minus that amount. And then it goes to the wholesaler. So the wholesaler, what the wholesaler does is the VAT that is payable now, what was an output to the manufacturer becomes an input to the wholesaler. And then the wholesaler, once they establish the input, they minus from the output that they've pushed down to the retailer. So the chain goes on. So the output for the wholesaler becomes now the input for the retailer, and the input will charge output VAT to the final consumer who's not a registered VAT person. So you see, at any given point, we've been knocking off all the VAT that has been received before, all the way down to the consumer who cannot push it to any other person. So from the myth we've just said is that at no given point will you be double taxed. We'll keep on removing so that at least we do not burden the final consumer at the end of the day. So this is an example. So I went to the shop and I bought water. When I look at the receipt, and this I'll just challenge us to go and look at the receipt. When you look at your receipt, the receipt that you always receive, they'll always have two values. There's the actual value, and then there's usually the VAT value. We'll always have these two values at any given point. So I'm seeing questions coming from the floor. We'll be able to address them once we complete the presentation. So this is a scenario. So I bought water. The actual buying price of this water was 100%. 100 shillings. But remember, my buying price as the final consumer, if we make an assumption, I'm the final consumer, has to be charged 116 shillings. So it has to have VAT included in it. So what is 16% of 100 is 16 shillings. So my actual selling price, buying price for this product was 116. But remember, we've said when it comes to VAT, we say it's input minus it's output minus input of VAT, not of the full amount. So I come down and ask myself, what is my profit margin? So from the buying price, I need to establish my selling price. So my selling price for this particular product is 200 Kenya shillings. So this is now after I've put in what is the gross margin that I want to have. And then I include everything and sell it at 200. So my selling price for this product will be 200. But remember, I'm still supposed to charge 16% on my selling price. So my selling price will be 16% of 200. That makes 232. So I've sold the products for 232 shillings. That is, of course, after I've included my gross margin and minus the 16 shillings that was charged. So if I want to put this in VAT context, it will be, what is my output VAT tax minus input VAT tax? So that is when I'll come, I take the 32 shillings, which I've charged as VAT to my final consumer, minus 16%, which was already received as an output for where I bought this product. So it will be 32 minus 16 to give 16 shillings. So in actual sense, what happens is the trader will remain with 100, which was what you wanted to make as your profit from that sale. And then you will remit shilling 16 to KRA. I hope up to that it is very clear. So the other method that we have for collecting VAT is withholding VAT. So withholding VAT is just a method of collecting VAT. And the only person who's allowed to charge VAT are appointed agents only. However, in the Finance Act 2022, registered manufacturers whose value is greater than 3 billion are excluded from withholding VAT. So we have gone through a journey with withholding VAT. Initially, the rate was at 6%. That was way back in 2014. But currently, the rate from 2019 is currently 2% of the value of taxable supplies. So another myth that I'll just like to explain is people always imagine I'm charged withholding VAT and I'm still charged the full VAT at 16%. So this is what happens when it comes to withholding VAT. So let's take, for example, the value of my supply is 154,000. That is the value of my supply. But then on that particular amount, if I add in my VAT, it comes down to the 16% comes to 179,000. The actual VAT that I'm supposed to pay for that amount is at the rate of 16% of 24,000. But remember, here I am, I'm an appointed agent, and my role is to be able to withhold 2%. So what this person will do, they will withhold 2% of, that is Kenya shillings 3,090. So this 2% will be withheld. It will be 2% of VAT. But what happens when now I want to go and file my return? When I want to go and file my return, I will give my full, my exclusive amount of 154,000 as my selling price, and then 24,000 as my VAT that I've charged. And then the system will calculate for you the 179. But you see, once I've already done and the system has already calculated for me the 24,720 to pay as VAT, the system also gives me an option to deduct this 2% that I've already paid. So there'll be an option when you'll be filing a return for you to include your withholding, all the withholding VAT that was charged, so that at the end of the month, you will pay the 24,000 minus the 3,090, because withholding VAT will be treated as if you've paid VAT in advance. I hope that clarifies the issue around withholding VAT, and it's quite clear to our dear listeners today. So what happens if I find myself I've filed the return, I've followed all these things that have been stipulated by law. I've found that I've made sure that the tax point that I used was the correct tax point. I've adhered to law. Is there a possibility of me getting a refund from VAT? The answer is yes, but these are the scenarios that will be able to grant you a VAT refund. One, VAT on bad debts. So when I was filing, I used my date of supply. I supplied a product to my customer and then accounted for the VAT at that particular time. But when it came to payment, my customer did not pay me. So what happens then? So a period of 3 years from the date of that supply, or where that person becomes legally insolvent, you are allowed to claim this as bad debt. So you will claim it as bad debt, and once you claim it, it will be able to just your account managed and verified, you'll be able to be given your refund back. So I mentioned something about the difference between a zero rate and zero rated supplies and excess credit, zero rated supplies. And I said the difference between zero rated supplies and exempt is one. Zero rate, I'm allowed to claim the input, but I do not charge any VAT to my final consumer. So if this is what happens to you, you may find yourself in a position where you are having excess credits. So if this is your situation, then you will be allowed to claim excess credits as a result of zero rated supplies. So then there is offset of refund excess credits arising out of withholding VAT. So I've just shown you how withholding VAT works. So what happens if that is not the only business that I'm doing and I'm having a lot of input VAT? So I end up finding myself that the 2% that was withheld is more than the VAT that I'm supposed to pay. So if you find yourself in these three particular scenarios, please know that you are allowed to apply for a VAT refund. So what are the Finance Act amendments of 2022? We've spoken about the rate of LPG being reduced down to 8%. We have excluded as person to whom an imported service is applied from reverse VAT. We've made clarification that input tax can only be deducted in a return for a period. So for you to be able to claim an input, you have to do it when you're filing your return. It's the only way. So inputs VAT claim in respect for open tender system for importation of petroleum products cleared through an unboarded facilities. So this the customs entry, for you to enjoy this, you should be able to give a custom entry that contains the name of the winner of the tender and the name of the other oil marketing participants in the tender, and then allow for input tax that may have been incurred by an oil marketing company participating in the open tender system before this amendment to claim within 12 months after the amendment. So there was a retrospective amendment to refund excess input tax for manufacturers supplying official aided funded projects. So penalties and interest have been aligned to the Tax Procedure Act, and there is deletion of provision of refunds of tax paid in error, because this is also provided in under the Tax Procedure Act. Remember, we said we are guided by the 3 documents. So where we found there was a repetition, we just align so that at least there'll be unity in how all issues are addressed. So, and then the other additional thing is VAT registration threshold does not, the 5 million threshold is not applicable to persons supplying imported digital service. So any person supplying imported digital service, again, is expected to be registered for VAT and account for the same. So there's also amendments around the exempt goods. So taxable goods for the direct and exclusive use in the construction of and equipping of specialized hospital, which is subject to the provision introduced, are not exempt anymore. Exemptions from VAT are including the bioethanol vapor stoves, pellets are in exemption for sustainable fuel briquettes for household and commercial use. Remember, all these things are being driven just to support the common wananchi and to support the environment. Plant and machinery of Chapter 84 and 85 used by pharmaceutical manufacturers, medical oxygen supplied to registered hospital, urine bags, among other specified health items, input and raw materials used in the manufacture of passenger motor vehicles, locally manufactured motor vehicles, and such capital goods, the exemption of which the CS, so the CS may determine to promote investment in the manufacturing sector, provided the value of such investment is not less than shillings 2 billion. So under zero rating, some of the issues that we have is the exploitation of taxable services in respect to business process outsourcing, fertilizers, inputs of raw materials that are locally purchased or imported by manufacturers of fertilizers as approved from time to time by the CS of Agriculture, and the deletion of zero rating of protective apparel, clothing accessories, and equipment because they are already under the exempt schedule. So the other information that we feel is key and important to us, it's key and important to us to share with you is one, the voluntary tax disclosure program. And this is because we believe in second chances. And what this program is supposed to do is to be able to just encourage our customers. If you had not disclosed tax liabilities to the commissioner before, this is a program that has been made for you. So it's a confidential program where when a taxpayer discloses tax liabilities that were previously undisclosed to the commissioner, you will be granted relief of penalties and interest that have accrued on the tax that has been disclosed. This program is only running for 3 years. and it became effective in 1st of January 2021. And the amount that you're supposed to disclose, which will be eligible for this, are amounts that are 5 years prior to 1st of July 2020. So between 2015 and 2020, those amounts between that particular between July and July of 1st of July of 2020, these amounts will enjoy that particular incentive. Another thing that we should note is for those who took advantage of this voluntary tax disclosure program, 100% remission of interest and penalties were given if you disclosed and made the tax payments within last year, which was the first year of the program. For those of you who want to take advantage of this program this year, the current year where we are in, 2022, if you take advantage of this program and disclose your tax liabilities, you'll be granted 50% remission. Remember, this will end next month, 31st. So come December 31st, we will be entering our third year. And the incentives for those of us who will take advantage of this and make payments next year in 2023, they will only receive Christmas. Confirm if you can hear me.
Yeah, you are now audible.
Okay, thank you. Sorry. I don't know where I got lost. Should I start from okay. So yes, like I mentioned, so 100% remission of interest and penalties will be was given to the taxpayers who took advantage of this last year. For this current year, we will be given 50%, but please note it will lapse come 31st of December, and then now we'll be able to, those who will take advantage of this in 2023 will receive 20% remission of the same. So taxpayers under audit, investigation, or other party to an ongoing case involving their tax liabilities sadly will not be eligible. This one also applies to a taxpayer who has just been notified of a pending audit or investigation by the commissioner. So please, when you're also passing the information, just remember this does not apply to anyone who's under audit, investigation, or involved in has a case that is involving their tax liability. So the other that we'd like to share is on integrity. So KRA is keen to uphold its so we as KRA have put in enough measures in place just to be able to address corruption. One can attest to is that most of our services are fully automated. So that is why you have iTax, you have ICMS, you have the RECT systems, you have our M-Service apps, the USSD codes. So we have automated our functions so that at least you'll be able to assist yourself at the comfort of where you are. We have a taxpayers charter, and the charter spells out the rights and obligations that you have as a taxpayer. We have an ISO department, and I'm still breaking. Can you hear me now? Can I be heard? So okay, thank you, George, for confirming. So we train taxpayers and the general public on integrity. So kind of like what you're doing right now. There's investigation of staff and tax evaders, and enforcement of KRA Code of Conduct. We also have KRA anti-corruption, gift and whistleblower policies, and we also have a corruption reporting mechanism. So if you encounter any corruption incident, you can walk in. We have a corruption reporting office that is based on 26th floor. 26th floor of Times Towers. We have a hotline number, which is displayed on the screen. That is 0726 984 668. We have an email for you that is corruption reporting at kra.go.ke. We have a complaints and information center that is CIC at kra.go.ke. You can even write letters to our Commissioner General. That is how serious we are about this integrity agenda. And we also have an informer reward system. So KRA will pay 5% of taxes recovered from the information given by the informers, but up to a maximum of 5 million. So we have the iWhistle, and iWhistle is a platform that we have in place. If we would like to report any corruption incidents, and the iWhistle gives you the room to be able to report this anonymously. It's accessible to anyone, and this is how you can access. If you just need to go through our portal, that is iwhistle.kra.go.ke, and then click on the report now icon. Then you'll be able to be, the system will be able to just guide you on areas that you need to fill in to be able to report that issue. So what is it that you need when you want to report, and what is it that you can actually report on iWhistle? One, tax evasion. If there's bribery, if there's fraud, if there's a conflict of interest, if someone has abused an office, so an abuse of office, concealment, or diversion of goods. So these are just the various options that you'll be able to find on our iWhistle to be able to just report the corruption incidents. So what will you be asked to provide when making a report on iWhistle? If you have financial reports, profit and loss audited accounts, if you have bank statements just to support the reports, banking detail, pay bill details, till numbers, PIN number, location of the business of or offender, mobile contact of the violators. So if you have this information, it will be good for you to be able to just include them on your report on iWhistle, so that at least you'll be able to guide the team on how to follow up on the report. So we spoke about this particular redress mechanisms that we have in place. And that is all that we have in regards to our session for VAT today. So I'm just going to go through the questions that we have on the chat. See some of the questions that came in on the floor. So there is a request to share notes. Yes, we will share the notes after the session, and also along with it, we'll also share feedback, just so that you'll be able to tell us areas of improvement. So thank you so much, Nixon, for that comment. So there's a concern here that some of the CU invoice number, if you scan it, it says that the invoice we're going to break this up and just share with our developers team to see if there's an issue and see how we'll be able to address the CU invoice number issue. So So I was on another session this morning for VAT where we were advised to file using the CU invoice number. My question is, from which month return are we required to do so? So maybe my question to you will be, when did you acquire the ETR, the Teams Enable ETR? So immediately when you have the Teams Enable ETR, immediately you should start using the CU invoice number when you're filing that particular return. Let me see. Also, there's a question where please clarify which invoice numbers should we use in showing purchases and sales in the VAT line. So for those who attended the morning session, we clarified this and we said the control unit invoice number, that is the one that you should use when filing that particular return. I hope that is clear, Tasnim. So what will happen to purchase invoices for those vendors who have not transitioned yet? The whole idea behind moving towards, I know for those of you who've been registered for VAT, when you introduced VAA, we had a few hitches, and the Teams enabled ETR is meant to clear out these VAA issues that we are currently having. So if someone has not transitioned yet, how then will we be able to match your output, which is supposed to be someone's input, to their return? So what will happen to you is that now people will not be able to trade with you because you'll be causing some inconveniences on their end. So we really urge all of us, please, we only have 15 or less days left for us to be able to transition to the Teams Enable ETR. Please, if you have any challenges, just reach out and you'll be able to be assisted. Please tell your friends so that they are not caught up in this confusion where your customers are not able to claim their input because it's not reflecting, because you're not using a Teams enabled ETR. So strategy and design consultants, we export services. Are they zero rated? Yes, they are zero rate. So how else can I know whether all my invoices has been validated by KRA? Is there a way I can get a discrepancy report from the past invoices? So what used to happen, Miriam, we used to run the VAA, and what the VAA will pick, because it's an automatic system, it will automatically pick any discrepancies that are there. And once you run the VAA system, if there's any discrepancies on the invoices that you've issued, you should be able to receive a report on the same. So yes, we will still run the VAA even as we complete and for the previous invoices, and you'll be able to receive a report on the same. So you've said the CIA unit number, invoice number is the number that we are using. That is the correct number that you are, I'm seeing it appearing many times. Just for clarity, we had a session today when we were discussing about which invoice number to pick, and the confirmation is use the CU invoice number. I hope that clarifies the issue, because it seems to be an issue that is coming up quite often from the chat box. Let me see the other question that you're having. So does the Teams compliant ETR need to be connected to Wi-Fi all the time? For van sales, can we sell for the day and then connect to Wi-Fi in the evening? Can I kindly just confirm that and then revert back to you, Tasnim? But the whole idea of the Teams and compliant ETR is for us to be able to get that information real time. So we'll highly prefer if it can be connected to Wi-Fi throughout, but I'm going to confirm and find out if there's any provision for you to be offline, and then we'll be able to get back to you. I'll just pick in your contacts, and we'll be able to just revert back to you once we establish if there's any provisions for this particular scenario. Why are some companies profiled not eligible for VAT input deduction, yet their ETR receipt has VAT? I'm trying to understand this question. Why are some companies profiled not eligible for VAT input deduction, yet their ETR receipt has VAT? You remember when I was describing the categories and the classification of VAT, we had an exempt section, and we also had the vertable section. So the one distinction that you gave between the two different classification is, one, if you're dealing with anything exempt, if I'm buying an exempt product, it means it will not be it will not have any VAT input on it. So for that particular reason, I am not expected to claim any input VAT, and I'm not expected to charge any output VAT. So adults, this could be the scenario that is happening. So let's say, for example, if I go to the supermarket and I decide to buy vegetables from the supermarket, if you're keen on that particular return, you will realize, sorry, on the receipt that they will give you, you will realize that whatever it is that you've bought as your vegetables will be zero rate. Will be exempt, meaning when you'll be filing your return, you will not be allowed to claim input VAT on those particular products. So that is why this could be a scenario that may arise, where maybe you've bought in VAT exempt products. So for that particular reason, by law, you are not allowed to claim any input VAT on them. So you are requesting if you can repeat on the section about tax point. So we said tax point is at what point are you expected to file your VAT return? And we gave the earliest of three scenarios. One, when you issue an invoice. Two, when you supply a good or service. Three, when you receive part or full amount. And four, when you are issued with an certificate, architect certificate. So what happens is, and I gave a scenario, and I said, what if I've sold to someone, and then that person has only paid half the amount, and they've said, I will pay the other half next month. So for that particular reason, what will have happened, you'll have received part of that particular amount. So when you receive part of that amount, then at that particular point, you'll be expected to account for that VAT. So I hope, Mbugwa, that clarifies the issue on tax point. So you are requesting, how can one see the question? I've lost it. Just a minute. So how can one claim back VAT paid in case of a customer becomes insolvent and returns back the original VAT invoices? What normally happens when you go to your profile, you'll be able to find an option for a refund. So under that particular refund, we'll ask you for proof, we'll ask you for supporting evidence and the reason why you're claiming that particular refund. So what we'll do as KRA, we will check and confirm the scenario, if it lies under the 3 scenarios that I described there. And then we'll ask you for proof. So those receipts that you've received back from the customers and any proof to show that the customer has become insolvent, just produce this particular documentation as your supporting documents. And then, of course, they have to be verified by your account manager. And once they are verified, you will begin now the VAT refund process. So it's just a matter of you applying for the refund through our iTax system and giving all your supporting documents to back up the request for refund. So we had said that, so you want us to repeat the issue of double taxation. We said the myth is usually that you'll be taxed double, either if, because you already taxed when you're buying maybe a product, and then when you're selling, you're still required by law to charge VAT on it. But what we clarified is that at any given stage where the product moves all the way up to where it reached the final consumer, you are allowed to remove and deduct any input VAT that was charged and replace it with your output. So the output from my previous seller becomes my input VAT, and my output to the next seller becomes their input VAT. So it goes all the way down as a chain up to the final person. That is the one thing that we said about double taxation. Another scenario where we were clarifying where taxpayers think that you usually tax double, we said was on withholding VAT. And we said with withholding VAT, once you receive a withholding VAT certificate, the system allows you, when you're filing your tax return, to deduct that amount of withholding VAT from the final amount of tax that you're supposed to pay. So I hope that clarifies the issue on double taxation as has been requested from the floor. I hope I can be heard. Can you hear me? Okay, sorry, I think I broke a bit. So there is a question. So how often should one do the ETR for exempt sales? Does it count twice if you do ETR for sale exemptions? TINS machine, and also file it in VAT exempt cells monthly. When you're doing an ETR, the way the ETR is programmed, it gives you an option to classify all these cells. So the only thing I'd advise you is when you're filing your return at the end of the month, just make sure that all your cells, the cells that you've made that are exempt, are included under the exempt option cells. So you only need to do it once. So my ETR supplier says that the ETR needs to be connected to Wi-Fi only. Please confirm if this is true. I'd like to use a GSM line and mobile data for branch. From where we are coming, maybe Tassim, this could be an issue of the particular model that you are using. So if the supplier has advised that it needs to be connected to Wi-Fi, it could be an issue of the model. So that could be the position. But for us from KRA, all we need is a source of data. How do we connect? If your ETR can connect using mobile data, if it can connect using Wi-Fi, as long as you'll be able to get that option of connecting to the real-time connection, we are good to go. So for that, I'm afraid it could be an issue of the model that you're using, and maybe that model in particular will only accept Wi-Fi only. So question, is there a VAT populated file that appears while one wants to file for VAT? Once we download the populated file, it has an auto-filled date and the withholding VAT withholding certificate. Is that all that it should contain? The VAT populate, the one scenario where you'll have a VAT populated file will be mostly if maybe you're doing an amendment and the VAT populated file will only have information that has actually been fed. Let's say, for example, now for the teams, because with teams, the information is real time. So anything that was passed through the teams enabled ETR, at least you'll be able to find that information on the VAT pre-populated file. So the information that you should find there should be based on the information that we've received. And that is where you see the withholding VAT certificate, you'll find it because immediately when someone withholds and makes payments, it goes directly to your return. So our hope in the future for VAT is that it's going to be highly simplified. If the perfect scenario will be if everyone who's registered for VAT acquires the VAT, the teams enabled ETR, then it means all your output, everyone you're trading with, because they'll ask you for the PIN when you're buying from them, all your input VAT will be populated. All your input VAT will also be populated because it's real time. Immediately when you issue a receipt, at least it reflects on it's reflected on your profile. So all you need to do when you're filing the return is just to confirm if that is the correct situation and then submit. That is the future of where we are hoping to and what you're hoping to achieve with the teams. But currently not everyone has gone on board. That is why you will find that some of the information is missing on the VAT populated file. I hope, Winnie, that answers that particular question. So I have prepared an ETR with 16% in October to a client who is withholding tax agent. When do I file the withholding tax? So what will happen is your customer who is an withholding agent is supposed to will withhold the 2%. Once they withhold the 2%, you will immediately receive you'll immediately receive an withholding certificate in your email address. So you can file it immediately on the next month when you're filing your returns, or but up to a maximum of 6 months. You have to do it within 6 months. So when you receive that particular withholding certificate, we encourage you to just claim the same. So we said, what do you require for a company to claim VAT return? We said, of course, your supporting documents must be there, of course, and the supporting documents will be driven by the reason that you're giving for the refund. So I think I'm losing some of the questions that have been asked because my network is a bit shaky. So what we're going to do, I'm just going to pick up, I'm going to just work with Dismas to ensure that we pick up all those questions that are coming from the floor, and we'll be able to address all of them and share them out when we'll be sharing the soft copy of the presentation and our feedback form. So with that, I request if I can just take the meeting back to Dismas. Dismas?
Thank you, Corazon, for the presentation. Thank you for the questions that have been answered. So I know some of your questions may not have been answered, but as Corazon has stated, the question that will be taken from the chat box and from the Q&A will be sent together with the presentation before the end of tomorrow. So I just thank you for your time, and we welcome you more for more sessions that are coming. Have a blessed afternoon.